And it looks as though we could see tech names in Hong Kong on the skids once again. Of course, we were talking about the issues on Friday relating to, of course, Didi abandoning that US listing and looking to move back to Hong Kong amidst, of course, all of this regulatory overhang. How challenging is that from an investment point of view?
No, it's definitely very challenging. Obviously, we're also going into year end, right, where not a lot of people really want to take on risk. So you get this very, very choppy price action. But, I think, obviously, of course, there's short-term volatility. There's the bigger picture. And we just also, our equity strategists just put out a report on their road ahead for 2022. And notwithstanding the volatility we're seeing in the short term, we're actually envisioning a 9% gain in MSCI Asia X next year in the end of 2022. So our bias is, despite what's going on right now and the concerns about COVID and China's slowdown and all the tech issues, there is our equity strategists do have a bias to buy on dips. And we're actually neutral China, Hong Kong in our kind of allocation. We're more overweight on Taiwan, Singapore, and Indonesia. But nonetheless, obviously, the whole argument is that some of the valuations are looking interesting, but it's just trying to figure out the timing because, as I mentioned to you, year end is obviously a very tricky environment for risk taking.
Okay, you just mentioned a few markets there that you're looking at within the Asia Pacific. Which one stands out to you as potentially the one that could deliver the best returns for investors as we move into 2022?
So again, this is equity. These are equity strategists too. As I mentioned to you, where they're kind of more positive on, and which is basically Taiwan, Singapore, and Indonesia. That's where they're relatively overweight because they think earnings trend still seems relatively robust and valuations are reasonable. In China, the issue is, even though you can make an argument on valuation, because of economic slowdown, that means the momentum for EPS will likely stay weak, so we're actually kind of neutral there. And then we're actually underweight India because of concerns that valuation look relatively richer. We're also underweight Korea. But again, as an economist, when I look at sort of the relative kind of economic story in terms of relative performance on the FX side, even though we're neutral on China, on the renminbi, we actually think renminbi will relatively outperform some of the Asian EMFX currencies because even in the backdrop of a China slowdown, which means import growth could actually slow down more than export, we still have a very comfortable current account buffer. And that because China is going to stay zero COVID for the rest of the year, services deficit will be very small because there will be very little tourism flows.